Trading stocks, options on stocks, futures, options on futures, and retail off exchange foreign currency transactions, Forex, involves substantial risk of loss and is not suitable for all investors. Past performance, whether actual or indicated by historical tests of strategies, is no guarantee of future performance or success. There is a possibility that you may sustain a loss equal to or greater than your entire investment, regardless of which asset class you trade, equities, options, futures, or Forex. Therefore, you should not invest or risk money that you cannot afford to lose. Trade Guide Limited is an authorized representative of Forex Max Limited and regulated by the Financial Conduct Authority number 229906. G'day folks, this is Younes from Supercharge Wyckoff VSA.com. I'm the author of Supercharge Your Trading and Investment Account using Wyckoff Volume Spread Analysis. In this video, I'm going to look at a stock, TOL Brothers, and what I've got here in front of you is the daily chart. Now, with TOL Brothers, we've seen that it's been in a uptrend, okay, going back from around about the $27 mark, and now it's trading at around just under $38. Okay, so it's been in quite a nice bull run of around $10 or so. Now, what I'm starting to see with this stock is some weakness appear. Okay, so let's have a look at areas of ultra high volume. So the first area here, which we saw a gap, all right, we could say that that is absorption volume. Okay, so we had a up bar which closed towards the lows, but the next bar was up, right, which confirmed that there was certainly buying. They tried to mark the price down, but it was on much lower volume. Okay, so we've seen the price push up. They mark it up, they test, and look where they come back to test the highs of this ultra high volume bar. There you have it. There was a test there, okay, and we saw, TOL push higher. Now, the latest ultra high volume bar is this one here, okay. We've had, and this one here, okay. So we've got the supply overcoming demand, right, which has been confirmed, and then that was followed by a upthrust. Okay, you see how they've tried, to mark the prices up, because what they want to do is to basically get the retail traders to go long, while the professional traders want to start offloading, right, their holdings. Okay, so they've pushed the price up and it's closed on the low. So that is a serious sign of weakness. After that bar, they've tried to push the prices up. Okay, but look at the volume. Look at the volume; it's much lower. Right, there's no interest in higher prices at this stage. So what I'm looking for, folks, in this stock is for a change in behavior. We're currently in a uptrend, okay, and that is confirmed on this daily chart. And if we look at the weekly chart as well, we are also in an uptrend. The weekly is showing me as well a upthrust. All right, so this bar will be, will close today on Friday, and looks like it's a major sign of weakness. Okay, so there's weakness appearing on both the daily and the weekly charts. So what I'll be looking for, a change in trend. That's the first thing I'll be looking for. Okay, what I'll do is I like to mark the lows of the ultra high volume bar, okay, which is currently sitting below now. Okay, so it's currently sitting, price is currently below our trigger point. So I'll be looking for further signs of weakness here. All right, a sign of weakness such as a upthrust, could be a trap up move, could be no demand. Okay, that's what I'll be looking for to possibly take a shorting opportunity. But I would like to see a change in trend, a change in this bull trend. So it looks like it's starting to change trend. So we could possibly have a setup coming into next week. Okay. Now, what sort of a strategy should I implement with this, stock? Well, we'll be looking at buying a put option. And what sort of option would I be looking to buy? Okay, so if I bring up my option chain, okay, we've got TOL here, we bring up the chain. Now, when buying a put option, I like to buy a put option with at least 2 to 3 months till expiry. Okay, the reason for that is because we like to have time on our side. Okay, and giving ourselves at least 2 to 3 months, we can potentially reach our target within that space of time. Okay, so you don't want to go for a option that's only got 2 or 3 weeks or a month left. Okay, you need to give yourself time. So we'll be looking for, in this case, probably out to July, or you can go out to September. Okay, so if we look at the September contracts, for TOL, all right, here we got the calls on one side, we got the puts on the other side. Now, when I'm buying a put option or a call option, I like to buy a option which has got at least a delta of 70. Now, what that means is a delta of 70 simply means that when the stock moves by $1, either way, the option will move by 70 cents. All right, so we need to look at a in the money option, right? Because the in the money options, your option will grow a lot quicker in value than if you go for a out of the money option. All right, so a out of the money option will have a lower delta. So let's just show you. So let's say there's a $33 put option, and if you have a look at the delta, it's 16 cents. So for every dollar move, that $33 strike option will move by 16 cents compared to if we go to say $42. All right, so for every dollar move, our option will move by 78 cents. Okay, so I'll be looking at around 70. So let's have a look at $41. Okay, so the 41's got a 72 cents delta. Okay, so that means now if I do end up purchasing the $41 strike, but this all depends on how far the actual stock drops. Okay, so if it drops further down, say to 36, I'll be looking at around about $40 strike. So look at a option which has got a delta of 70, but at this stage, it's the $41 strike which has got a delta of 70. Okay, so we've got here the bid and the ask price. So the bid's 380, the ask is 420. I do not like to buy at the ask price, and when I sell something, I do not like to sell at the bid price. What I look at doing is buying and selling at the midpoint, which is the average price between the bid and the ask price. So in this case, I would put a limit order of $4. All right, so I'll buy this option for $4. Okay, and then as the stock drops, because it's in the money, it'll grow a lot faster than a out of the money option. Okay, so that's how to read this option table and how to buy a put option, um, which has a higher probability of success for you. Okay, you can look to our July. All right, so if we look to a July $41 strike, all right, we can see it's a little bit cheaper. All right, so our bid and our ask, all right, 330 to 360. So our midpoint there, it's about 345 or so. Okay, so July is fine. We're still, we're towards the end of May. We still got June, and this expires on the third Friday of July. So you could look at taking a option at that price as well. But I like to have more time, and I'll opt for the September contract. Okay, so all right, so that's what we're looking at. We need to wait for a change in behavior. Okay, so it could be down towards around around about that 36 and a half, 36 level before we decide to enter a trade. But I'm looking for signs of weakness below my trigger point of 37.78. Looking for no demand up thrust trap up moves. Okay, so for TOL. Okay, so any questions at all, please shoot me through an email to info@superchargewyckoffvsa.com. Have a great day, and I wish you consistent profits.